to your Monday Market Outlook. My name's Matthew Buckley. I'm the Chief Investment Strategist here at Wealth Creation Investing, and doing this a little early. I'm knocking this out Sunday afternoon down here in Sao Paulo, Brazil. I'm down here to work with the leadership division of Oracle during an event tomorrow, so I wanted to knock this out a little bit early. And one of the reasons I also wanted to knock it out on Sunday was because of news coming out of China. First of all, folks, at Wealth Creation with Options and at Wealth Creation Investing, we try and teach you to be a strategic trader or investor, to stop looking just at tactical events, to get your periscope up, your radar up, looking downrange outside of just your laptop, your desktop, and your trading screen. And you really have to look at what's going on around the world here. Retail sales in China, industrial production, just not good news. China's CPI rose and their industrial output is slowing. And that is not good. Okay, that's our banker, and they've already sneezed. Now they've caught a cold, which means we're in for a little bit of a rough ride. And as we debriefed last week, remember that we also weren't seeing good news in the United States. Now we'll talk about later in the week, but earlier in the week we saw that U.S. factory activity, PMI, contracted for the third month in a row in August. That's bad. And then we also debriefed that one of the biggest canaries in our market, the United States market's coal mine, dropped dead, or at least gave a warning, and that was FedEx. FedEx warned of a not pretty picture coming up globally and also domestically, folks. So a lot of red shoots, so to speak. But then we saw some green shoots, right? We saw the ADP reports. I don't know what Planet Jobs report that was written on. And then on Thursday, and then of course we had Mario Draghi and the ECB stepping up and saying, you know, the euro is unsinkable, like the Titanic, or whatever he said. But it immediately reminded me of the Titanic as soon as the guy said that you know, the euro's here to stay type of thing. I'm like, okay, sold. So we had the Draghi put in place on Thursday. The market had a rip your face off rally, and then kind of the market was rubbing its face on Friday when it saw the official jobs numbers come out of the United States. 96,000, an anemic number that would take over 5 years, almost 8 years at that rate, to get to pre-recessionary employment numbers. And of course, before the Obama administration could take credit for the unemployment rate going down from 8.3 to 8.1%, somebody smart stepped in the way and said, no, that's not good news. That's because hundreds of thousands of Americans have just given up. They've left the workforce. Done. Had it, and have given up. That's not good, folks. So we have a lot of potential bad news going on. And what's going on in the market? NASDAQ. 12-year high. S&P at highs we haven't seen in about 4 years, since 2008. Gold going through $1,700 an ounce. You know, cover of Barron's this weekend. Housing is coming back, and it's really not to be believed, folks. And the traders at Wealth Creation with Options and also at Top Gun Options know it's not to be believed. Let's take a quick look at the past. Let's take a look at the S&P 500. Here's the financial crisis as the world ends. Okay, down here to 666. You know, that evil bottom that we saw. And then what happened? And then Uncle Sam decides to get involved. And each one of these lines you can see to the upside. You can put you can put a name on it. QE1, QE2, Operation Twist, and then Operation whatever the hell Bernanke called the last round of bond buying. But look at what the market does every time the effects of quantitative easing wears off. The market sells off. Okay? And it looks like the effects of that quantitative easing, each time we do it, get less and less. So folks, in my opinion, as a chief investment strategist, bad news is actually going to start being bad news here pretty soon. What do I mean by that? Bad news recently in the market has meant good news. Why? Because the market thinks that bad news means that the Fed's going to have to engage in more bad mortgage buying and, you know, buying longer-term treasuries, selling shorter-term treasuries, and adding liquidity to the market. But you can see, you know, obviously looking at the left side of the chart is like driving at Richmond, a NASCAR race, looking in your rearview mirror. But folks, just take a look at the previous effects of government intervention. Now, this started back, I love Obama trying to take credit for the auto industry and stuff like that. Bush actually, started all this stuff, and I excoriated the president for getting involved in any of this. He and Paulson, we should have let it fail, folks, period. We'd be in a much better situation we are right now, because this rally is not to be believed, none of it. Now, we're not going to fight the tape, but at Top Gun Options, we are hedged, folk, and at Wealth Creation with options, we are absolutely hedged. So when the market decides that bad news is bad news, we're going to be ready for it. Okay, so what's going on this week in the markets that we want to talk about? Monday, I think the markets are going to react a little bit from some of the Chinese news that we saw today. So I think we're going to see a little bit of flat consumer credit on Monday. Should be interesting. Tuesday, not a ton of important stuff coming out, but Wednesday is big for several reasons. One, Tech September. Apple's supposed to come out on Wednesday with its iPhone in San Francisco. And we saw Amazon get a nice pop last week from its new Kindle Fire. Now we're starting to see some price wars. Apple's going to come out with its iPhone 5. We got the Microsoft's 8 tablets going to be rolling out here pretty soon. So September's tech wars are going to be fully joined. And we have some great positions on in our wealth creation with options profile model portfolio. We have an Apple diagonal that we put on about a month and a half ago that's up $7,700. So that was a nice trade, just one contract there in a diagonal. So that's a pretty sweet trade that we're liking with Apple, and that was an iPhone 5 long-term play. So there's a nice 7,700 gain in our model portfolio just on one position. Thursday. The Fed's right here, the FOMC press conference. So there's going to be some other reports coming out. Who cares? Weekly unemployment claims, yawn. They're almost treated like monthly ones right now, but it's waiting for Godot at the press conference. Based on the anemic job numbers last week, the market's almost certainly priced in that the Fed's going to engage in another round of quantitative easing, whether it's called QE3, Operation Twist, or as you know what I call it, Operation Snake Eating our own tail. He's going to engage in some sort of monetary easing, or language that says he'll keep monetary policy loose out to 2015, which is it's in an election year. It's just sad. It breaks my heart as an American. Friday, August retail sales come out, and that's going to be pretty interesting. And we also have some University of Michigan consumer sentiment. So I'm going to be watching consumer sentiment and also retail sales and some CPI numbers as well, and core retail sales. Nothing really big, but retail sales to you as a retail trader are probably going to be important, and also consumer sentiment. Okay, so that's what's going on. That's kind of a debrief of last week and what's going to be going on this week. I'll be back from Sao Paulo very early Tuesday morning, taking the red eye back from Sao Paulo to Miami. So I'll be back trading on Tuesday. I'll be trading tomorrow too before I work with the Oracle leadership folks down here in Brazil. But great week ahead in the market. I think we're going to move sideways going into the FOMC statement. Going to put some SPX and some other potential iron condors on, and also play some volatility. So if you're interested in getting involved in live trading with me as the chief investment strategist and learning how to trade options and potentially creating wealth with options, make sure you check out our Wealth Creation with Options program, and you can give it a 30-day test trial. And we did a great live trading session last week where we put on a nice diagonal on gold that's already making money. If you take a look at a couple of our gold positions right here, nice diagonal out here that's out until September. It's already up $1,600. Another one up $500. This iron condor we got blown out of the top on that we're going to adjust. But yeah, so we have some nice gold diagonals on. I think the gold rally, gold's been on a tear, obviously, because Helicopter Ben's going to get airborne and just dump money off of his printing presses there. And that's not good for the dollar. So gold's going to see a little bit of a tear, but I think it's, at passing $1,700 here, it's getting hypoxic at this altitude. So we're also going to talk in our live trading session Wednesday at 1 about what we're doing with some of our gold positions. Okay, so we got to get running, got to get ready for my Oracle folks tomorrow. Happy hunting, make sure you hedge, and I'll see you at Friday's market wrap up.